All right, it's Friday, January 19th. This is an end of the day and end of the week SPY recap. And today we end up with a two up green bar that reached a whole bunch of targets, both short term and longer term. Once we had the reversal here on Wednesday, we talked about how that could set up a really good buying opportunity. We followed through the next day, yesterday, and we talked about how on the weekly chart, with 1 day to go, we had a green week from last week that hadn't quite taken out that high. When you see the green bar, you kind of expect the highs to be taken out, so you were kind of anticipating that today. Obviously, we did that. And on the yearly chart, we had been talking about it since the beginning of the year, how once you get a two-up year, your target here is that 4,800 area. And obviously now we're green on the year, and who knows how high we're going to go. It's all-time highs, but we have the open of the year to kind of use as our reference point. As long as we stay above that, we're green. We'll look for buy signals and opportunities, and maybe at some point we fail and come through there and turn the year red. At that point, we'll see if we come all the way down through the halfway point of the prior year in order to fail. But it's a long, at this point, all context is to the upside. So today, once we gapped up again, you could see the pre-market range was between the blue lines. We're above the midpoint of the prior day. So we gapped up, had a little bit of a pullback before the session started, red bar to start, but we're looking for kind of our buy opportunity. So you had the red to green move here as a buy signal, and then from that point on, you kind of worked up. You kind of paused a little bit at the pre-market high. You're expecting that to be taken out. Then you got through it, and obviously you never looked back, and it just kept going up, up, up. There was actually no reversal signal. So, it was the type of thing where you're biased to the upside. You had the targets on the weekly chart to kind of hit its weekly high. You knew the yearly targets were 4,800. So again, it's just not surprising that within the context of the big picture up, you were going to get possibly a day like this, once you determined that the first bar was taken out to the upside and then followed through to various targets. So now we're just kind of, obviously temporary exhaustion risk here, taking out our yearly targets, but we do have this yearly open down here, to monitor. So, and we're closing the week strongly green, so you expect a little follow through next week. So the only way, you begin to fail, if it's even going to fail, would be to kind of come down through the mid, maybe let's say we head up a little bit and then go down, through the midway point of that bar on the short-term basis. If we start up and come through the halfway point of this bar, maybe that's a failure. Maybe we start down a little bit next week, but if so, then we would expect a little follow through to the upside to take out that high, given that we're closing at the high of the week. So again, very good buy signal here on Tuesday. We followed through for 2 days. Today was just a classic buy signal early that kind of went up to its pre-market high, and then followed through past the 4,800 area, and now we'll close near the highs of the day and kind of expect some follow through in some form next week, and then we'll monitor from there. But a little bit of exhaustion risk. This, we wait for buy signal. These are the ideal, buy signals, the 2 down, 2 up. So we might have to wait for something like that to unfold. We might have to take out some liquidity, in the short run as we continue higher. That's always a possibility with exhaustion risk, but we'll just have to see how the market opens and, the pre-market range, the first bar and everything else, and go from there with expectations for follow through higher. We're in all-time highs, and until we get a failure on the weekly chart, you just got to keep that bias to the upside.